Nice to meet everybody. I'm Irina Ivashkovskaya. I'm the head of the School of Finance in our university, which is called High School of Economics, and I'm also the academic director of degree program Master of Business Analytics. And today I just want to introduce the tracks in our program because the tracks, they also explain, of course, the specificity of our master degree program. And I'm the head also not only of the program itself, but of the first track in our master degree program. And the title of the track says that it's about value-based business analytics. So why should we focus on that particular track? I'll try to explain it step by step. So first step, if we talk about the finance function in any business, in any industry, of course, you might agree that the finance person who works in finance function is deeply inside financial reports. He or she works with the financial data from the financial reports of its own company. And of course, he or she must monitor the financial data and financial reports of some other companies in the industry, in the competition, in the market. Our financial person also should attract, of course, financial resources, should think about the efficiency, should make and develop different decisions how to pay out the cash flows of the company, how to attract capital, and how to provide payouts for different types of investors. Many different decisions. So you can add, of course, that finance person will look at some data at financial markets, in banking system, in capital markets, so on and so forth. Is it enough? I would insist it's not, because we need to think in terms of very specific criteria, looking at the performance of the company. If you just apply simply different approach based on the financial reports of the company, you will miss the idea of company risk. So finance person should go into the details of the strategy of the company, strategic competition and position in the markets. And they, of course, change and even often change. Why it's so important? Because if you follow this particular data, you are deeply inside the risk behind the business and the drivers of that risk. And the finance function nowadays is, of course, concentrated on the risk analysis and the risk management. So to understand the performance of the company, in our program, in all the courses, we try to persuade the students that it's just not enough to look at the reports and extract the data which can explain return on capital employed, even in dynamics, even in comparison with our peers of some other companies, so on. But we need to develop the value analysis. And I'm trying to persuade you just to think in terms of the spread on capital, which is the difference between the actually earned return on capital employed and on the other side, the required rate of return required by whom? Required by different types of investors who provide the financial capital, debt capital, equity capital. And of course, they will try to understand the risk of the company and they will require the compensation for the risk. So the spread, that's the difference between these two rates. Actually earned income, which is return on capital employed, and required rate of return, which is based on the risk level of the company. So whether that spread would be positive, negative, or even zero, it depends, of course, on the efficiency of that business first. And that's why we can say that it's must that finance function also, and the person who works in finance function also should know what are the leadership practices, the leading practices in terms of the efficiency. And as well, because the spread of return on capital and required rate of return depends on the risk, the finance person should know really well what is the leading practice in risk management. So if you combine this leadership position in efficiency and leadership position in risk management, then we can explain the power of the business from the point of view of finance vision. So in finance, we should apply that spread on capital. We also must look at some strategies and strategic position of the company and competition, as I already mentioned. That's because we are very much keen on the dynamics of the company, the growth rate of the company, which in its turn depends on the leadership position in internal business routines, whether you are the leader or not. And of course, in the leadership position in the competition, which we may describe as outside practices, when company deals with its clients, with its suppliers, with other companies, and with the community. So, and we in our program, in our team, we also think about this growth rate as some particular metric which demonstrates strategic power of the company. So to summarize this preliminary observation, I would say that, of course, the finance person must apply the idea of power from the finance point of view and strategic power, which describes the dynamics of the business. But it's still not enough, and that's why in our track, we also try to persuade our students that the finance person has to go much wider, and he or she must analyze different types of capitals. It's better to say even multiple capital approach. The traditional approach says that he or she will follow the idea how to finance the business, how to attract debt capital, equity capital, about the rates of return when attracting these two different types of capitals, and how to implement them, how into some investment project, and then the manufactured capital will also appear in his area of analysis. But nowadays, the competition is totally based on the uniqueness of the business, and that's why the finance person should also analyze intellectual capital, which comprises the human capital, the clients or relational capital, and the organizational structures, organizational capital of the company. And in addition, we need also to pay really much attention, and the growing attention, to the natural capital, which describes very severe problems with the climate, water resources, and so on. So the finance function nowadays assumes that the person should be familiar with different problems arising in intellectual capital components and components of natural capital. And that's why I can introduce such a type of equation to some extent, saying that on one side of a coin, you need multiple capital approach. Why? Because you need to understand the risk drivers, and you need to understand the drivers behind the cash flow creation or cash flow generating capacity. And in that equation, we can say that the risk drivers and the drivers for generating capacity for the free cash flows, they will explain the stakeholder value creation, not shareholder value creation itself, but much wider. Stakeholder value creation, just because we need to follow this multiple capital approach. I can just extend that equation saying, well, you will follow this multiple capital approach. It will mean that being even in finance, much more focused on some computations, on the metrics, on the measurements, you need to understand and even to measure the interests of equity holders and debt holders as you did before. It's traditional. You need also to measure the interests of those who are generating components of intellectual capital. You need also to understand the interests of different types of communities who are behind the natural or ecological, environmental capital. Only in that case you can understand the process of stakeholder value creation. Only in this case you will understand how long could be your planning horizon for the business if you know well the interest of these multiple financial and non-financial stakeholders. And then it comes to the very important conclusion that nowadays, finance person should take care about the stakeholder value creation. That's why his or her professional career track should be focused on the so-called chief value creation officer. And he or she should be pretty well aware that it's much more complicated professional message. Within this particular message, the finance person should develop very new metrics for non-financial capitals, a very new approach for different projects within the company, which will really provide business transformation, and the company will contribute to the inclusivity, to the inclusive growth. Inclusive growth means that you are trying to satisfy, and you are successfully satisfying different interests of different types of stakeholders. So the finance person should develop, to summarize, new metrics, new approaches and conceptual frameworks for financial modeling, and new conceptual framework how to analyze potential business decisions. So that's the essence, the focus of the first track that's called Value-Based Business Analytics. When talking within this first track about this particular area, we also should develop specific project labs, and those project labs will be led by professional experts from different types of businesses. They can be changed, those project lab leaders of those labs year by year, but what is really important, we need in the first track to be focused at least on 5 very important types of topics. The first is how to apply value-based criteria based on stakeholder value criteria to any type of business transformation. Let's say ESG transformation, environmental social governance transformation. Second, how to develop successful strategic deals applying the same criteria of stakeholder value creation. Strategic deals will include different mergers, takeovers, or buyouts, or spin-offs, etc. The third very important type of topics for our project labs in the first track will be about business restructuring, when company could be in position of financial distress or should totally change its product portfolio. This is called business restructuring. The fourth very important topic is how to apply and how to make a decision, how to provide the analysis for making that a decision, how to involve new financial instruments, new instruments to finance business, let's say green finance as well, how to make this social impact, and how it can also influence in its turn the rate and the cost of financing the company will attract. And the fifth type of topic, last but not the least, this is about venture capital, how you will attract those very risky providers of financial resources as well as providers of professional expertise to develop new knowledge within the business. Venture capital attraction. This is minimum list of topic, of course, but it means that the finance person within our program, the future financial professional, of course, they need to be involved into this very, very difficult, very complicated decisions. And that's why I, of course, wish you a success in choosing between these tracks. So I was talking about my first track, and I underlined already that we need new types of information because we need to involve multiple capitals, non-financial capitals, new non-financial metrics, so on and so forth. And that will mean that the second track in our business is about strategic business reporting or non-financial reporting, because the finance person, as you may now understand well, needs very new type of information, very new type of the reports, which will consider non-financial data, non-financial capitals, non-financial metrics as pre-financial. So I wish you success choosing the program and choosing between the tracks.